Hello and welcome to Daily Market Movements. Welcome to another episode of Commodity Watch. In today's video, as always, we're going to be analysing the US crude oil markets and the gold market. Let's start off with the crude oil markets. We've seen plenty of volatility over the past couple of days. We've had crude oil, which has slipped below $80 a barrel. And this was due to the fact we had some top analysts come out in Wall Street and they basically forecasted lower crude oil prices in the short term due to the fact that they believe that the inventory numbers will start to build up. So at this moment in time, production of crude oil is very low because the US isn't pumping much oil at all. We have OPEC that has cut their supply, but it's expected that OPEC will increase their production, and as well as that, there's always the possibility that the US could commence to start pumping oil as well to kind of help with the surging energy prices that are currently occurring in Europe and the US. And of course, if that happens, supply and demand economics 101, the more of something there is, the lower the price. So I think that's why crude oil markets have been under pressure this past week. Let's just see from a percentage perspective how far we traded down. So we're down just under 10% in the past week or so. So it hasn't been good for the crude bulls. But look, since August the 23rd, I should say, we're still up 38%, and off those highs, we're still up 28%. So I think that this is just a technical pullback here. I think eventually we do trade higher. We go back up towards $85 a barrel. But what's key for the crude oil markets right now is that we trade back above 80. Once we're back above 80, I think that's when it gives us that target of $85 a barrel. But if we do break below and get a daily close below the 50-day EMA, that could open up the doors to a further move towards the downside, down to perhaps $76 a barrel. And if we break below there, then we go to the next fib level, down at 73. So very key that we hold this 50-day EMA, because if we break below it, then you've got the fib levels towards the downside, and of course you have the 200-day EMA all the way down at $69 a barrel. This was something that I did warn you guys about a few weeks ago, because the RSI was considered to be overbought, so I did anticipate a pullback for the crude oil markets. We got down to $80. When we were trading up here, I did forecast a move down towards $80, and we've got it, and in fact we've gone a little bit lower. But I will be monitoring the 50-day EMA to see whether we can break back above the $80 price level. But on the flip side, if we do break below it and have a daily close below the 50-day EMA, then I'll come on here and give you all an update. But moving over to the gold markets, the gold markets are still consolidating up at their monthly highs. We're up at around 1858. As I mentioned in previous episodes, we have managed to break out this downtrend that we've been trading in since August 2020. Very bullish indeed for the gold markets. We're currently pressing up against that 0.5% fib level, up at 1875. If we can get a daily close above that level, that sends us all the way up towards 1922, which is the top of the A side of this ABC correction that we've been trading in. So things are looking very bullish indeed for the gold markets. If we do see a move lower here, we could go as low as 1830. What is key for the gold markets at this moment in time is that we do not break below 1830. If we break below 1830, well, then that will just mean that this whole breakout here that has recently occurred in the gold markets was just a long false breakout, and that could trigger a move all the way down towards 1769, and I think that would be the end for the gold rally, and we will see a move down towards 1670. But that hasn't happened yet. We're still consolidating, which is actually a very bullish thing to happen at this moment in time for the gold markets. We've seen that breakout. We're just consolidating, holding these levels. The RSI is slowly getting better, because we were considered to be overbought short term. But look, we're all the way down at 63. So I just think that gold is recharging its batteries here before it starts its next leg towards the upside. So things are starting to get very exciting for the gold markets indeed. But that's it for today's video. I thought I'd just come on in and give you a short update with regards to the oil market and the gold markets. If you would like to see my longer in-depth video with regards to both markets, then please head over to my streaming service website, dailymarketmovements.com. I've left the website link below this video in the description, and that's where I give a more detailed video with regards to these markets and where I believe that they're heading and my strategy when it comes to opening and closing trades. But thank you very much for watching today's video. Please subscribe to the channel and give this video a thumbs up.
Thank you.